baby dolls, welcome back. I've got a special tweet for you, and you will hear the message today. The secret edge of crypto that nobody will tell you. Nobody but me, right? Because we're friends. If you only buy decentralized coins, you're too late. Look for centralized communities and coins which dilute over time. It's easier to convince 5 people not to sell versus hoping 1,000 people don't trim profits collectively. And there's a cute little squirtle squad here. So we're going to unpack this, what this means, because this is one tweet. I can speak for 8 hours on this one topic. We're going to go through it right now. You're going to get all the incredibly important information right here. So yes, this is secret edge of crypto. If you've heard of cryptocurrency, like me, we probably heard of Bitcoin. Bitcoin is the world's first decentralized money. We thought that the more decentralized something is, the bigger the number go up pump. We now have to say that we were wrong. Okay? We are wrong. It did have value and it pumped fast, but it eventually stops pumping. There are visionaries out there in crypto who could see this happening, but for the rest of us, we have to learn the hard way. Okay, so Bitcoin slowed down. So in this second part, I say, if you only buy decentralized coins, you're too late. We're going to go through this, man. If you only buy decentralized coins, you're probably going to first look at Bitcoin. And you're probably going to think, okay, well, compared to 2010 to 2015 to now 2023, Bitcoin is getting more decentralized over time. And let's quickly have a look at the chart here. And you will say, okay, my friend Somi, there is something wrong here. How come it was going up really fast here when it was centralized, and now it farty noises here? Huh? Yeah, man. I know, man. I know. Look, the fact that you're learning this off me means we're still early, and not everybody has figured it out yet. Which means that when we play the game in the bull market, there are going to be people who will get fooled by this narrative, and we are going to participate in the same coins as them, potentially. You have different strategies, but we will have an exit because we will know at the end of the day, just because something is super decentralized does not mean it's going to keep going up faster and faster. That has nothing to do with it. Nothing. In fact, it's quite the opposite. So, I've mentioned here, look for centralized communities and coins which dilute over time. Effectively, what I'm saying is, look for a coin that is early. It's early. So let's bring back the Bitcoin, okay? So Bitcoin was early here. Bitcoin was centralized. It was super centralized here, and it was still super centralized here. Relative, it was still centralized, right? And then it was less, and now it's really decentralized. It's not fully, right? I think it's like 60% or whatever. I don't even know the real number, but it's not fully. Like Grayscale still has 600,000 Bitcoin. Coinbase has like an enormous amount, probably a million or two or something, right? Satoshi still got 1 million. So yeah, you do have a few guys who can send us all to zero. But for the most part, a lot of big whales on chain, they sold big amounts here, man. They sold, 10,000 clips, 20,000 clips, and they got out. And back here, they were selling 100,000 clips, or whatever it is, you get the point. Over time, they lost their positions. But the price is going sideways. What is going on? It's tough. It's such a tough reality, man. It's such a tough reality, So let's go through this more. We're going to go deeper. I've said here, this needs a rectangle of friendship. It's easier to convince 5 people not to sell versus hoping 1,000 people don't trim profits collectively. So let's go, right? Let's go. So we're going to go deep into this. So back here in these times, there were people who bought Bitcoin because they genuinely believed in freedom, liberty, and a decentralized form of money, which acts as a police force for world political currency in the world, not to destroy them for anarchy, but to act as a check, a security check, to make sure that the people, the innocent people, you and me, you know, like holding your national fiat currency, you don't get excessively diluted. And Bitcoin was brought to this world by Satoshi as that police check. He did not want society to crumble. He just released this with the hopes that, hey, maybe if I put this out here and it had value, then world governments will eventually think twice about printing for their friends. And he knew they will keep printing for their friends and squash the middle class and the lower class. But he wanted them to at least think twice about it, because they will now have competition, and competition is healthy. So that is the ultimate goal of this. And what happened at the start? It was super centralized. At the very start, Satoshi owned all the coins. Satoshi mined all the Bitcoin. Satoshi had 1 million Bitcoin here, okay? Let's check the quick dates. Yes, so he, Lord Satoshi owned, you know, like 99% of all the coins. Let's just say 100% he did. He was the first miner. He was the first dude. Satoshi owned 100% of all the coins. And then what happened, right? Over time, then he only owned like, you know, 50%, you know? So he had 1 million of 1 million. And then here he had 1 million of 2 million. See what I mean? And now he has 1 of like 18, you know, which is whatever it is. Like, so Lord Satoshi earns what, like a 7%? Let's say that, you know? So I want you, as my friend in 2023, to please tell me when was the best time to buy Bitcoin. Is it when Satoshi only had 7% of the pool? Or when Lord Satoshi had all of it? You tell me. I want you to tell me, okay? And we don't even need to argue. Let's get the returns here. So when Satoshi owned like 100% of the coins, okay, let's not look at the return today, okay? I don't like doing that. I want to use like a 4 or 5 year return, okay? Like a 4-year return. So 2010, let's go to 2015. By the way, see, look what I'm measuring it. I like to be honest, okay? I am putting it at the bottom of this crash, okay? So look at this, see up here, Bitcoin crashed, where I'm gonna stop it to 80%. So I'm gonna imagine you bought when Satoshi had all the coins and you are paper handing on a minus 80% clip. You can see these numbers, right? So when you see these percents, a really cool trick, remove the last 2 digits and that's your X's. See how it says 331418? Remove the last 2 digits, 18, and now you just have 3314X. So you know Bitcoin did 3,314X on your money. 3,314X. $1 became $3,314. All right, sweet. That's when Satoshi owned all the coins. If you go here, all right, I don't know the real number, but I'm just going to guess. Let's say Satoshi owned 20% of the coins, okay? I'm going to make these small, and it will be a bit green. Okay, so we're now buying here. So let's say you bought in 2015, and you're like, hey, I want to buy decentralized coins, you know? Satoshi used to have 100%, that's too centralized. Now I'm going to buy when he's only 20%. And I will say, good day to you, sir. You do what you want. You're making a grave mistake if you do this for the future, but let's learn from this. So what's your 4-year return? You're 2015, let's go to 2019. And I'm going to be generous, by the way. I'm going to say you sold like the exact top of here. The exact top. Like you're that much of a nutcracker, you sold that top. So remember the trick, you're going to remove the last 2 digits, remove them, and now it's just 52. You made 52x. So 3,314x versus 52x, okay? 3,300x versus 52x, okay? So we're going to have to make this bigger font, all right? I want, like, it's staring us in the face, okay? These numbers are so absurdly different. You have to pay attention to this. You can't sit here and ignore this number. If it was like 33x, 20x, maybe not so much. 3,300 versus 52x, it doesn't matter about anything except being early. And being early means it's centralized. So if Bitcoin was centralized at the time, you could probably draw like a curve here at the start, right? So you might have like a decentralization graph, yeah? So you might have a decentralization graph, right? And Bitcoin was very, very centralized. So maybe it started at 0. And now its decentralization is going up. But if you look at its 4-year ROI, at the start you got 3,300x, and maybe it went down to like 800x, right? Down here. And then it went down to like this. This was just 52x. And what are we down to now? We're down to like 4x. Look what's happening. Your ROI is going down over time as the centralization is going up. Isn't this a poopy? Isn't this a big poopy? So this is a big, big poopy. A big fat doo-doo. You can't ignore this, man. You can't ignore this. You want to ignore this? Be my guest. You're going to get crushed. You're listening to me. High value content. That's why I love you. Okay. So that's what I'm talking about in this tweet. I'm going to bring it back. Okay. Remember, it's easier to convince 5 people not to sell versus hoping 1,000 people. So now that we know, right, what was going on here, what do you think is easier to do? To believe that Satoshi was a religious prophet figure who wanted to do good to the world versus 1,000 people, Coinbase and everyone else, and you gotta hope that they all don't collectively like trim their portfolio. So I don't say dump because they're not all gonna dump it all to 0, but so that's why I say trim. So I think you'll come to the same conclusion, right? So we're just gonna write this down. So let's say in one world, Satoshi has 1 million coins. Yeah. Satoshi has 1 million coins. It's going to be orange. And then let's just do world A. World A. Satoshi has 1 million coins. Okay. And then clone it. And in world B, you have, 100 exchanges. Let's do 10 exchanges own 100,000 BTC, just to make it simple. Or you could even divide that by 10. So 100 exchanges own 10,000, or 1,000 exchanges own 1,000. Okay, there we go. All right. So world B, 1,000 exchanges own 1,000 Bitcoin. Satoshi has 1 million coins. It's the same value. The exact same value. So I think, this is how I think about it. I think it's easy to trust Satoshi. One person. It doesn't matter that it's Satoshi. It could be anyone else, okay? It could be anyone. It could be Joe Biden. Doesn't matter. I think it's more likely that we can figure out the personality and focus on the game theory behind one source or a very, very small group of people, and we can try to figure out what their ultimate plan is. And I think you have a higher probability of assessing that versus 1,000 exchanges, 1,000 different factions, 1,000 different people, all right? So you got to think, right? What do you think chances of Satoshi selling minus 30%, or minus 50% to take profit? So you got to think about that. That's what I think about. What are the chances of Satoshi saying, I want to buy a hot new car. Let me take 50% of my Bitcoin out, dump it on the market, right? There's no guarantees in life. I just think someone who's that much of a prophet, I think it's easier to assess the probability of that to be lower versus 1,000 exchanges. You go, chances of each of them selling, 10% or minus 50% collectively, right? I think you can look at them from this lens and say, I can make an easier decision tree and focus on Satoshi here, not dumping, versus the 1,000 exchanges, I don't trust them. Some of them might form factions. They try to take each other out, and if they're holding so many coins like on a per capita basis that if Bitcoin goes up like 10x, they want to take profit. You get what I mean, right? You get what I mean here. So This is why at the start, it was so easy for Bitcoin to pump. Because if you just knew, you just got to know one variable. Do you believe or not? And Satoshi believed. He just didn't dump. He obviously didn't dump, right? So that's why when you see centralization, it doesn't mean automatically the coin goes up. It just means your odds of assessing the picture increase dramatically. That's what I think. I think it's easy to look at one person and go try to figure them out versus try to look at 1,000, because we'll never figure it out. There are 1,000 collective people, because you might spend all day, man. Maybe you're looking at 100 of them, but you are assessing it wrong. Maybe like the belly of those 1,000 people is like a 400 core corrupt amount of people who just want to do dumperage and all this other stuff. You get the point, right? So this idea, right? You're looking at this and you think, okay, we get the point now. Centralized coins pump because less people have pressure to exit, because they're like searching for glory. That's another way to think about it. They're like, this is my one chance to crush everyone, by myself and carry the torch. That's another way to think about it, okay? So this is why, really, at the end of the day, it is always easier to look at a few number of people and think, if they just don't dump, man, how high can we go? And that's exactly what happened when you look at Solana and some other coins. BNB, the top 100 addresses of BNB, the Binance token, they own 99.1% of the coins or something. I'm not even joking, like huge, 99%, the top 100 addresses. So CZ and his close associates, he's probably told them, I've got a water pistol to your head, none of yous are dumping, or you're out of the circle. And maybe there's only like 6 or 12 or 15 people, and they're all like, yep, we all have a similar philosophy, we are not dumping. And then, that's why you can see, let's get this out, man, while we're here, let's get this out. That's why you can see, let's look at BNB coin, BNB's market cap. I'm going to change this to a 2-week chart. That's why we can say, whoa, went from 0, right? That's why BNB has found it so easy to just keep going up in a bear market even. It's found it so easy, man, because there's less possible cracks, right? Look at this thing going up. Centralized as shit. So, but it doesn't mean automatically it goes up, because sometimes the central party is really out to screw you. So, centralized versus uncentralized, it affects fundamentals and it waters down your potential for great pumps. That's what the evidence is showing us so far. We have 13 years of Bitcoin history to show us this. I hope one day I'm proven wrong. Oh man, I hope one day I'm proven wrong. And I hope we get to ride some big project to the moon. And I hope one day more decentralization means bigger of a pump. I really do. But right now the evidence says that actually the contrary, okay? So you want to hunt coins where you're early, where, and by the way, investors and VC guys, they know this. That's why they go find the project. They go, hey, you own a project, we're getting in early, give us the coins, we're the central party, we won't dump, right? And you see that, but then in the bottom of the bear markets here, they do dump because they're all scum. They do dump, man, they do dump. They do dump. They dump. They're all weak trash. They're all weak trash. So it doesn't give 100% certainty, but at least it skews the probability in our favor, because we're going to be in this game for a long time, because it's the greatest game of all, okay? So I want to show you something else. Bitcoin's inflation rate at the start was, here you go, 100% in 2011. 100%. And you have to take yourself back to 10 years ago. There was no Twitter. There was no YouTube. There was none of these like influencers or anybody to clearly explain what's going on. It was just cypherpunks, geeks, okay? The nitty gritty guys, the engineers, people who are appreciating this. They don't know how to talk to you, right? They don't know how to talk to anyone. They're introverts. So there was no like rational, clear, explanatory guy going on like, hey, Bitcoin has a 21 million hard cap and everyone understands it and there's a halving. These concepts were so foreign to everyone back then, and I'm going to prove it to you very shortly, that all you needed to see was, oh my god, this thing has a 100% inflation rate, but it's supposed to be a world supply of money. Why is it inflating so hard, right? So that's why people had to market it. And they go, no, the inflation rate's going down. That's what they're saying, it's going down. See, silly, it's going down, you know? And the people who understood this were the big beasts who bought and they held and they made millions and millions and billions of dollars because they understood this. The fact that me and you can understand this in 5 seconds means we're late, okay? So this is an unfortunate reality. You know, it's kind of like you feel relief. Oh, I can understand something. I'm smart. Nope, it means we're late. We're not early anymore. This is where Da Vinci, where is 2011? Right here. Richard Hart and Da Vinci, I think they bought Bitcoin. Here you go, right here. They bought Bitcoin at that top. Actually, you can see it on this yellow. You see this little orange chart? They bought it right here. I'm drawing an outline for you. That's the Bitcoin chart. Okay? They bought Bitcoin right there. $30. Both of them. Richard Hart and Da Vinci. Both of them, I'm not going to dox their wallet sizes, have multiple thousands of Bitcoin. And they bought the top. Okay? So they're not nobodies. They know what they're doing, you know? So they understood. These guys are smart. Da Vinci and Richard Hart, I noticed, they're so smart. They can read something like once and they understand it. But for me, I'm a peanut brain. I've got to go through things like 10 times, right? So they understood. Hey, man, yeah, the inflation is high now, but it's going down over time. So the follow blue line, they're like, yeah, man, of course. I just got to wait 5 years and things going down. They understood that, you know, but the average person here didn't. So they had edge. So now I'm telling you, what does the average person believe? The average person believes that if something has very high inflation, it's a scam. And if it's super centralized, it's a scam. People still think that. How do I know this? I speak to everyone. I love people. I speak to people. I know what the average human mind is thinking, us investors, because I thought that at the start. Okay, so people think right now, okay, so if you have high inflation, right? There's an X here. That's what they think. And they think centralized equals centralized is wrong. But we now know these are not given as true. So I'm not going to say tick them off. I'm just saying, right? Draw a question mark and write a question mark. Investigate. You might see a coin with high inflation, but go look at the schedule, you know? It has high inflation. When's it coming out? Who's the inflation going to? For example, with Zen, they have had high inflation and then it stopped. And now they said that now the marketing people, you know, people who own it, saying Zen's deflationary. And I'm saying, no, it's not. The current supply is going down. It's deflationary today, but in 350 days, there is a big bomb coming off when everyone's tokens come out. It's going to be massively inflationary in 350 days again. So it's not deflationary. So the inflation is going out to people who mined free. Okay. What about with Hex? People say with Hex is super inflationary, but its inflation is copying Bitcoin. That's why Richard Hart's copying it. Hex's inflation is going down over time, right? The short-term inflation rate, it used to be like 12 or 13%. It's down to like 9.6% now. So, you know, it used to be like 13%, right? And then it went down to like 11%, right? And then down. Now it's like 9.5%. This is short-term inflation, right? Yeah. And you can just keep going down. And a few years, it's going to be like 7% and then 5%. And what's going to happen is just like Bitcoin is hitting after like 2022, like look at this. Okay. Right here. See this number? That blue little number, 1.70% inflation rate for Bitcoin today. What did it used to be when Da Vinci, J15, and Richard Hart bought it? Inflation rate, 63%. So these guys became billionaires, very, very wealthy when they bought something with a 63% inflation rate and centralization. They bought it and they killed it. And now you buy something with 1.7% inflation and a D for decentralization. Decen, all right? And you are going to get a poopy emoji. And I'm going to have to draw a poopy emoji for you. And that's it. We're going to have to draw a poopy emoji because that's what you're going to get, okay? And it's going to be smiling and it's going to be stinky because that is exactly what your portfolio is going to be looking like if you invest based on this principle and you think you're going to get number go up a lot. You're not going to get number go up a lot. You're going to get a good long-term stable savings vehicle. If you don't panic sell lows, you'll get that. If you're looking for long-term stable growth, which beats the S&P 500 with more risk, okay, good enough. But I'm here 18 hours a day. I'm here to kill it. I'm here to kill it. You're here to kill it. You know all the tourists are gone. You're not listening to me to tell you, oh, go buy Bitcoin and hold it for 10 years, yeah. You know you're not listening for that, okay? So that's why. I will, when someone says, this guy owns all the coins. So with Hex, right? With Hex, okay? With Hex. Everyone says Richard Hart owns all the coins. They say Richard Hart owns all the coins, okay? And I'm like, that's why I started investigating. I'm like, he owns all the coins. He's going to dump. And I thought to myself, what if he didn't dump? Because I had no information at the time. I'm like, man, what if he didn't dump and it was just a big psyops and everyone kept buying? Wouldn't that be insane? And I'm like, wait a minute, isn't that what Bitcoin does? You know, everyone thought, oh my God, Satoshi's going to dump. Satoshi's going to dump. Satoshi's going to dump. The inflation rate kept going down and look what the price did. The price kept going up and up, here, up as well. So you need that factor, right? That's why, man, you take on the risk and you get this right, you're going to be smiling all the way every day because you achieve something great, all right? So this is my ultimate message, man. When you're looking at centralization, right, I want you to think about this final message. This is 2013 Bitcoin. As Farhad Manju relates in his entertaining but dubious foray into the market, Bitcoin is the brainchild of a person or persons called Satoshi Nakamoto. Look at the green part. These features are supposed to make Bitcoins irresistible for consumers. Meanwhile, stripped of the power to manipulate currencies to advance nefarious ends, governments will collapse and we will live in an anarcho-utopia. But look at this at the end. Yet history shows that private currencies always end in tears. If central banks sometimes abuse the trust we place in them, the alternatives are worse. They're basically saying Bitcoin's a Ponzi going to zero, okay? The strangest feature of this Bitcoin saga is that people who are so suspicious of government put their trust in Satoshi Nakamoto, who could be anyone or anyone's. Eccentric academic researchers, mischievous Fed economists, DARPA, UN globalizers in black helicopters, a criminal syndicate, a bored 11-year-old Ukrainian genius. If Satoshi is as immoral as he is ingenious, then he pocketed the early Bitcoins and laughed himself to the bank. This reads like an anti-Hex Richard Hart FUD article. It's the same thing, friends. It's the exact same thing. It's like saying, he's so smart, he found a way to dump. I've read this all before, man. And I will finish with you the title of the article. Fool's Gold. Bitcoin is a Ponzi scheme. The internet's favorite currency will collapse. Yeah, it collapsed. It collapsed upwards. I love you all, friends. Until next time.